Okay, picking up for our last couple problems on the Chapter 4 sample problems. Problem here, we are on, let's see, 1, 2, 3, 4, problem 5. Okay, so problem 5 here is to calculate the current ratio. So we need to know the formula, all right? Now the formula for the current ratio, we take our total assets divided by our total current liabilities, or I'm sorry, our total current assets here, divided by our total current liabilities to get our current ratio. And what this measures is what is the ratio between the assets we have available to pay our liabilities and the actual short-term liabilities that are going to require the use of those assets. And so you typically want a higher ratio. You want to have more assets in relation to your liabilities. So really anything over 1 is okay because that means you have more assets than liabilities. Anything below 1, you start to get alarmed because that means you don't have the cash or short-term or things that will be quickly converted to cash in order to pay off your liabilities that are imminently due. So, but what we have to do here in order to get that is we have to know which of these are current assets and which are liabilities. So take a second and go through here and label these as to whether they are current or non-current, or which ones are current assets and which ones are current liabilities. So pause the video and do this, and then I will resume it here in just a second. So hopefully you're paused. And if you're done being paused, I'm going to go ahead and walk through this. I guess I will do it either way. So that's a current asset. Accounts receivable is when we have performed services or sold somebody something and we're waiting imminently for them to pay us. That's a current asset. Prepaid rent, typically you don't pay rent more than a year in advance. So that is rent we paid ahead of time and they owe us use excuse me, of something. And then office supplies, we typically don't buy those more than a year in advance. And then equipment we would use for more than 1 year. So that's kind of our cutoff there. All right, so long-term. Okay, this is a current liability here. Accounts payable, we typically pay those off about every month. And then this is long-term. All right, so capital withdrawals, revenue, depreciation, expense. Okay, so looks like this is it for current liabilities, and these are our current assets here. So knowing that, I'm going to add these up. So 4,000, 3,200, 1,900, and 3,000. So 12,100 for total current assets. And then we just have the one current liability, so no math required for that. And I'm just going to clear my writing here. And so then if we take the 12,100 and we divide that by the 5,400, gets us our current ratio to 2 decimal places they want, so 2.24. All right, and how able are we to pay off our short-term liabilities? That's the question we're answering with this ratio. All right, next problem, prepare an income statement for the year. They're giving us an adjusted trial balance. All right, so I don't think I'm gonna really have to do any math here imminently. So let's just put this over here. So just like on our previous example here, this one is going to have revenues at the top and it's going to have expenses down below. So scrolling down here, looking for our revenues, 13,800. And then for expenses, we've got rent, supplies, depreciation, interest. Okay, rent, supplies, depreciation, and interest. it's trying to tell me to autofill this and it's not correct. So, and then we need to do our total expenses there. So it gets us a total of 9250. So then we're just going to take our revenue minus our expense. So 4550. Oops. Oh, I forgot to put the name of my revenues here. So service revenue. There we go. All right, so that's a review of the income statement there. And then our last problem here is going to be statement of owner's equity. So same thing we did in that last problem here. So we're going to have our beginning capital will be last year's ending capital, which should be the 16,150 here. So take a minute and try and do this on your own based on memory from what we just did a second ago. Just to see if you remember, what do we need to add in to get to our capital here, and what do we subtract out? So they gave us the trial balance, but we're going to need to know what our net income was. And I think they did actually give us a net income statement here. So same numbers actually from our same numbers from our last problem. Either way, so net income of 4550 will get added in. And then we will also subtract out then our capital with owner withdrawals, which would be on the balance sheet here. So 1400. So we're just going to then calculate our subtotal and total here. 16,150 minus 4550 gets us 11,600. And then, oops, it should be plus, actually. Never mind. Sorry, I should have added that because we had income. So 16,150 plus net income, 20,700. Sorry. Talking and typing. Okay, so then the 20,700 minus our withdrawals of 1,400, which decrease our equity in the company. So net income increases our equity, adding that in, and withdrawing cash out of the company decreases our equity. And a reminder, our equity is equal to the amount of our assets that we own after we consider the liabilities that we need to pay. All right, and that is it for the sample problems here in chapter 4. So hopefully you've watched the lecture videos, you've now watched the sample problems where we walk through some examples, and you now are ready to work on the homework.